Well, folks, the day we've all been waiting for, Meta, Amazon, Apple, all just reported earnings. Meta is my number one biggest position in the public account. Huge position, obviously, for me. Amazon, number 3 biggest positions. They just reported earnings. I'm going to take you through all the numbers, very in depth. We're going to go through all this. Okay, Meta making a huge move after hours, $59 a share. It is up. It's up to $454 after hours based upon my share count in the public count tomorrow. Assuming the stock was just right here, I would be up $107,000 in new profit tomorrow. And then Amazon, based upon where that stock is trading at, it's up about $11 after hours. That would be about $11,600 additional up tomorrow. So should be a six-figure day, maybe plus or minus $50,000, somewhere around there. Apple, we're not going to speak about that one in today's video because I got too much to go through in regards to Meta and Amazon. So I'll probably eventually talk about the Apple numbers, but it's just not today, okay? So 3 things we're going to get into in today's video. We're going to go super in depth with the Amazon numbers. So for everybody out there that really likes stock market investing, you really like going through numbers in depth, this is that video for you. We're going to go very nitty-gritty here with Amazon, what's going on there. Then we're going to get very in-depth with Meta, go through the numbers very deep in regards to Meta there. And then lastly, we're going to talk about where I think these stock prices are going from here. Do I plan on buying more shares of either of these stocks? Do I plan on selling some shares and taking some big profits in either one of these stocks? So we'll get into that, and obviously the profit should be pretty immense. It was already pretty immense, right? It's 400. I mean, tomorrow maybe I'm up $600,000 on Meta or somewhere like that, right? And Amazon, maybe I'm pushing $75,000 of profit. So, obviously that's a lot of profit. So we got to talk about, is it time to maybe take some profits in regards to that, okay? First off, thank you. A lot of people on Twitch today were telling me congrats and things like that. I appreciate each and every one of you. Thank you so much for, saying congrats. And also congrats to anybody out there that is a Meta shareholder or is an Amazon shareholder. Congrats to you guys as well because, you deserve a thumbs up for yourselves. And, all I ask from you guys is smash a thumbs up. Make sure you subscribe to the channel. That's it. Okay, I appreciate you all being here as always. If you want to see the stocks I'm buying and selling tomorrow, then join my Discord, or my Patreon, I should say. You also get Discord access to that. But by Patreon, that's going to be pinned comment down there. And also, if you just want to support the channel, you can do so on Patreon as well. And then if you're looking to join my private group, you need help understanding financial reports, understanding if stocks are undervalued, overvalued, things like that. They'll also be pinned comment down there. Okay. All right, guys, let's start going through this Amazon numbers first and foremost. Okay, so it always starts out with kind of the most broad numbers. Are they beating analyst expectations or not? And what I told you guys is I thought Amazon was going to knock the doors off. I told you I thought they were going to blow out their numbers and they were going to crush analyst expectations. And sure enough, they came through and they crushed analyst expectations. They came in with $1 of EPS. 80 cents was expected. So if they would have came in with like 84 cents, 83 cents, something like that, it'd been like, okay, they slightly beat. Little beat there. Coming in with $1 just smashed it. And then the revenue was even more shocking. They beat by nearly $4 billion. Billion. I mean, that's incredible, okay? So they knocked the doors off. Phenomenal from that standpoint, okay? But to go through the nitty-gritty here, okay? Let's start going through this. So they did nearly $170 billion in revenue in the quarter. In a 3-month span, nearly $170 billion. Now, the most shocking thing of that is I was kind of looking at projections for next year. I think there's a decent probability they're going to be over $200 billion of revenue in this same quarter next year, in Q4, which is crazy to think because, no company's ever done over $200 billion in revenue in a quarter. And I think it looks like pretty probable that Amazon's going to be the first company to ever put up a number like that, which is just mind-blowing number, right? Yeah, if I recall, Walmart was the first one to ever hit $100 billion in a quarter. But yeah, when we start talking about $200 billion in a quarter, that's just wild, okay? In terms of our North America segment, that was $105 billion there, $24 billion AWS, and then $40 billion international. This is on a trailing 12-month net sales. They did $574 billion in revenue in the trailing 12 month. Now, this is pretty fascinating because this is during a bad year. This was a bad year for Amazon in terms of their growth rates and everything. You had a consumer that had been sliced and diced by inflation for the last 2 to 3 years, right? That they had to deal with in 2023. You obviously came off of Rona in the super growth rates that we had during that particular time period. And then simultaneously, AWS, their growth rates were in a very bad place for much of 2023 and part of 2022, but especially 2023, because a lot of companies started to have to cut back immensely on their AWS spend. And that hurt Amazon numbers as well. So it's phenomenal to see, them put up in a bad year, $574 billion in total sales. Like, that's incredible, right? Now, in terms of operating income for the company, it went to the moon. They went from $2.7 billion of operating income in the same quarter last year to over $13 billion of operating income in this latest quarter. That was up 383% year over year, up 379% on an FX adjusted basis. It's just unbelievable. Operating income on a trailing 12 month went from $12 billion to almost $37 billion of operating income on a trailing 12 month. That's up 201% year over year. Net incomes might be the most crazy of all of them, okay? From $278 million in net income in the same quarter last year to $10.6 billion of net income in this most recent quarter. That's pretty nuts, okay? Now, on a trailing 12-month basis, they went from a $2.7 billion loss at this same point last year on a trailing 12-month basis to now $30 billion in the plus. Incredible. Simply incredible. Segment results. North America. Look at the operating loss to income. I mean, this is phenomenal, right? First off, they did $105 billion in North America. That does not include AWS there. But they went from a $240 million operating loss in the same quarter last year to $6.4 billion operating profit, operating income. That's unbelievable. I mean, the change on a year-over-year basis is crazy. International has something very exciting going here, okay? Check this out. This is important. So, in regards to international, first off, their business is growing much faster international than it is actually in the U.S. That's good to see. But check this out. Operating loss. They lost $2.2 billion in operating loss in the same quarter last year. Now they got it down to about, a little over $400 million of operating loss. So what this tells me is operating profits are coming. And they're likely coming this year in 2024. Seeing how much progress they made so quickly there, yeah, I'm feeling pretty confident and kind of seeing especially these two past quarters. I think there's a pretty high probability operating profits are coming here for the international segment, which then takes the international business from a situation where this was being a drag on the business to actually being a tailwind behind the business. From a headwind to a tailwind, that's the best possible situation, which is just another thing that's going to help, Amazon's profitability go to the moon here. Hey. Now, AWS, this is a king business for them. Why do I call it the king business? Well, although it's not big numbers in terms of net sales compared to the international business and compared to the, traditional North American business, it's a king business because look at the operating income. It dwarfs all the other businesses. That's why this is a king business. And so operating income went from $5.2 billion in the same quarter last year to $7.1 billion. AWS is going to get a lot more exciting in 2024 and beyond. You've already went through all the companies out there have already gone through their cost-cutting measures of 22 and 23. So that's all behind us now. So now, looking in 24, it's all about just growth and growth and growth. And then you have the AI component tacked on here. That's just another leg of growth here. So AWS is going to go from, being pretty depressing story over the last, I would say, 2 years to actually a really exciting story over this next 2 years. And so that's great to see there. That is the king business for the company. Free cash flow on a trailing 12-month basis. This might be the most important chart I'm going to show you in regards to Amazon here. Okay, check this out. Q4 2022, they're at $11 billion plus negative free cash flow, right? To now almost $37 billion in this most recent quarter on a trailing 12-month basis of free cash flow. Now, the reason this is arguably the most important chart is not just because of that turn of about, we can call it about $48 billion turn there, which is crazy. But the other reason that's the most important chart is you got to understand the way Amazon stock is valued by a lot of investors out there. And how a lot of investors value Amazon is they value it based upon free cash flow. Now, personally, I don't value Amazon that way. I think about forward P metrics. I think about where Amazon's net income's going over the coming years, and I make my judgments based upon that. But a segment of the investor base. Another big segment is all about free cash flow, free cash flow, free cash flow. That's always been the talk around Amazon. And so when you see free cash flow go from that to this is going to excite a lot of Amazon shareholders currently or potential future Amazon shareholders. Okay, that matters big for Wall Street. Now, I also love this. No big dilution in the shareholder base, right? If you look at the shares outstanding, it's hardly moved. And so I love that, because the one thing usually you could talk negative about tech companies is share dilution. Oh my gosh, they're diluting you so much. You're not getting as much as profits as you think you're really getting because they just keep diluting you. And Amazon's kept it, pretty dang steady over the past year. So I applaud the management team for that there. Now, check this out. Operating cash flow on a trailing 12-month basis, almost $85 billion. They're on their way to $100 billion plus in operating cash flow here, folks, okay? Insane numbers. Now, in regards to the balance sheet, check this out. Stacking cash. Over $73 billion in cash and cash equivalents now at this point in time, folks. That's insane. So they're stacking cash big. Look at stockholder equity. It went from $146 billion in the same quarter last year to now it's over $200 billion in stockholder equity. So love it overall. Overall, just great. Just great. Now, I'll speak about Amazon stock a little later on in terms of where I think the stock price is going and whether I'm planning to buy more shares, sell shares, and things like that. We'll get into that in just a moment. I just want to cover those numbers there. But now it's time to get into meta numbers. And it was fascinating because while I was prepping this video, I had my speaker on over here. And on Pandora, all of a sudden I started playing Mike Jones. You remember that song? Back then, hoes didn't want me. Now I'm hot, hoes all on me. That's the story of meta stock, folks. That's the story of meta stock. This stock, no one wanted this stock. Let me take you back to November 2022, which was not even a year and a half ago. This is crazy to think. Not even a year and a half ago. Not even 18 months ago. You had people selling this stock at $88 a share. By the way, somebody sold me shares at $88.94. Thank you for that, whoever did that. Woo, man, they're not watching this video because they're a Wall Streeter, but I appreciate them for doing that. Now we have after hours, people are paying $450 a share for this, and they will be paying $500 plus. Fascinating, right? That's crazy. By the way, completely random meme I saw out there. Tesla investors watching every other stock, mega cap stock hitting new highs. Don't worry, Tesla, we will have our time to shine again in the future. It's not right now, but it will be coming, okay? So don't worry, we'll have our day again. Don't worry about that, okay? Meta. Let's talk meta numbers. Let's go nitty-gritty here in regards to meta. Oh, by the way, before we go nitty-gritty, let me just say this. They crushed it. They beat all analyst expectations, knocked out of the ballpark. Boom, boom, boom. Okay. Nitty-gritty here. Revenue by user geography. U.S. and Canada, $18.5 billion. In the same quarter last year, they did $15.6 billion in U.S. and Canada. European market, and keep in mind, all these markets, have had to deal with inflation. They've had to deal with problems in the economy, a bad consumer, bad business environment, bad confidence. They've had to deal with so much crap. In every market they're in, the emerging markets, Europe, US, it's all been negative. And so look at the growth this company's put up. What do you think it's going to be when there's good times again? What do you think it's going to be when business confidence is high again? And consumer confidence is high again? What type of numbers do you think Meta's going to put up then? And Amazon's going to put up then? Think about that for a moment. European market, $7 billion in revenue in this quarter last year. Now they just did $9.4 billion. As far as Asia Pacific, $6 billion up to $7.5 billion, so $1.5 billion up there. That's incredible. And then if we look at rest of world, $3.4 billion in the same quarter last year, now $4.5 billion, right? Very well done. If we look at segment results here, advertising went from $31.2 billion in the same quarter last year to almost $39 billion in advertising revenue in this most recent quarter, right? And the next year, remember, it's political year. Ooh, baby, the ad spend's going to come in there. Reality Labs revenue, $727 million in the same quarter last year. Over $1 billion of Reality Labs revenue in this most recent quarter here. So that's good to see. Definitely things are on the right path in terms of revenue ramping for Reality Labs, right? In terms of Reality Labs operating loss. They're still losing a fortune on that business, $4.6 billion. So it's still a huge money loser for them, but it's good to see at least the revenue trending in the right direction, right? And I was very thrilled to hear on the conference call, Zuckerberg said demand for their eyeglass-related product is actually ahead of their expectations, and the company Luxottica that they use for that product as well. So I was really thrilled with that. Total income from operations went from $6.3 billion to $16.3 billion. Operating margin went from 20% to 41%. That's one of the most insane operating margin increases I've seen in my life. Like like over a double up in operating margins, just not even thought of as something as usually like possible. Like no way. And Meta just did it on a year-over-year basis. Ridiculous. If we look at expenses as a percent of revenue, I mean, it's a night and day difference between where the expense base was for this company versus where it's at now. Phenomenal. Okay. Net income went from $4.6 billion of net income to over $14 billion of net income in this most recent quarter. Diluted EPS went from $1.76 to $5.33. I mean, these numbers are just ridiculous. Ridiculous. In a bad environment. In horrible consumer confidence. In horrible business confidence. I mean, and they put up these numbers. It's insane, right? Now, CapEx, they actually dropped that on a year-over-year basis, which Wall Street definitely loves to see that right now, right? We're still in a time period where Wall Street doesn't want to see you spending like crazy. We'll eventually get back to that sort of time period again, where Wall Street wants to see you spend. It's all about the revenue. But Wall Street still right now, they still want to see profits. They still want to see margins for right now. So for right now, let's be honest, Wall Street likes this. Family daily active people went from 2.96 billion to now 3.19 billion. So that's, somebody using at least one app every day. Obviously, they own Facebook, they own Messenger, they own WhatsApp, and they own Instagram, right? And they own Threads as well. So, yeah, 3.19 billion now. I mean, it's crazy. Every time you think they can't grow anymore, they grow more. Check this out. Family monthly active people. This is somebody using at least one of their apps once a month. Went from 3.74 billion to nearly 4 billion people now at this point in time. 3.98 billion. I guess they're not going to stop until literally every single person on the planet, all 7 billion plus people, are using one of their apps at least once a month. That's incredible, right? Family average revenue per person, arguably the most important metric when it comes to Meta, right? ARPU. Check this out, $10.10. That's an all-time high for the company. So getting into the double digits, baby, and we're just going to keep growing from there. Now, check this out. Look at this. Revenue up 25%, costs and expenses down 8%. What do you think is going to happen to your bottom line? It's going to go to the moon. Income from operations up 156% year over year. Net income up 201%. Diluted EPS up 203%. I mean, does it get better than that? It really doesn't. It really doesn't. Check this out. Up to $64 billion in cash and cash equivalents and marketable securities now at this point in time. They took their cash and cash equivalents from about $14.6 billion in the same quarter last year to $41.8 billion in this most recent quarter. So obviously their balance sheet is improving quite a bit year over year, right? Total stockholder equity up to $153 billion from $125 billion. So that's headed in the right direction as well. Now we got to talk about the shocking thing that happened here. In the shocking thing, outside of just great beats by Meta and great numbers and a good conference call and all those sorts of things, was dividend? Yes, Meta's going to pay a dividend of 50 cents a quarter, it sounds like. So, I mean, there's a lot to factor in. So first off, that's a starting dividend. So as long as Meta's profitability keeps going up over future years, Meta will likely raise a dividend, year after year after year for maybe the next 10, 20, 30 years. So it might be a 50-cent dividend you're seeing today, but 10 years from now, it might be, in terms of a per quarter, but 10 years from now, it might be $2 a quarter that's getting paid out, or $3 or $4, right? Could be $10 a year in 10 years from now, or $20. It depends on how much Meta really wants to raise it over the coming years. But just based upon the starting dividend, I did some math here, and based upon the shares I got in the public count, I should start to receive $3,600 plus a year in just dividends from Meta stock. And once again, that's just a start. So assuming I keep my shares, the next thing you know, I'll start collecting $4,000 a year, $5,000 a year, $7,000 a year, $10,000 a year. So pretty exciting. I'm happy about it. And I also think it's going to show good cost discipline by the management team as well. So I think it's a mature move to make. for Meta at the stage of the company's at right now, right? Now, the other exciting thing from the share price perspective is now we just opened ourselves up to a lot bigger investment community because dividend investors can finally consider Meta for the first time ever. If you're a strict dividend investor and you're like, then there's a lot of people out there. They say, I will not touch a stock. I don't care how much I like the stock. I don't care how much I believe in them or think they're going to grow or blah, blah, blah. There's a lot of people that say, I will not touch a stock if it doesn't pay a dividend. And so, for those people, that group of individuals, for the first time in history, they can actually consider buying Meta stock. And that's a big change because it's actually a pretty fair amount of people. Like, you'd be surprised at how many people won't touch a stock unless it's a dividend payer. Because they're like, if the company's not going to pay me, I'm not buying it. It's a flawed way of investing, by the way. But nonetheless, it is a way of investing, okay? Then secondly, dividend ETFs and related funds in regards to dividend stocks are all going to be coming to Meta stock now at this point in time, right? And they're going to be coming all this year and being either forced to buy it up or choosing to buy it up. One of those two situations is going to happen for these dividend related ETFs and funds. So overall, here's what I see happening, okay? Because you have, if we look at the Mag 7, as they call it, certain stocks pay dividends, certain don't, right? Apple pays a dividend, Microsoft pays a dividend, NVIDIA actually pays a very slight dividend. You don't really see it. And then Meta's never paid a dividend, Tesla never paid a dividend, Google and Amazon never paid dividends. So who's up next? So I think everybody's going to see Meta stock price reaction and kind of what's going on here. And I think next to jump on board is going to be likely Google McDougal. They're going to likely jump on board and end up starting to pay a dividend. And then Amazon's going to likely jump on board as well and start paying a dividend. I think the last of that bunch will be Tesla. Tesla's got too many growth opportunities and I think too many other questions marks about the business, so I don't think Tesla's really going to pay a dividend anytime soon. I think they'll be a holdout for at least another few years in regards to dividend. But these guys are next up as far as dividends there, okay? Now, so we spoke about, the numbers very in depth here in Meta and Amazon. Things are looking phenomenal there. Now let's talk about where I expect the stock prices to go from here. Let's talk about if I'm planning on buying or selling these stocks and those sorts of things from here, okay? So, first off, both these stocks will pull back here and there, Amazon and Meta, right? There's going to be small pullbacks here and there. The market's going to get rough all of a sudden, maybe we have a pullback at some point in February or March or something like that. That's going to happen. That's just normal market trading activity. That's going to be what that's going to be. But at the end of the day, the way I see this playing out is these stocks are going to be going higher and higher and higher, really until the next recession, which the next recession is going to be the big unemployment recession likely. And but no one knows when that's going to be. That could be 2025, that could be 2026, that could be 2027. At some point, that big unemployment recession will come and we'll have 7, 8, 9, 10% unemployment. But until we get to that time period, these stocks are ready to run and run and run, and there's really nothing stopping them, just to be quite frank. In the meantime, the government can maybe hurt them a bit. The FTC doing certain things to try to hurt them, right? We know Linda Khan, FTC, they've tried to do some things in regards to Meta and Amazon. So outside of the government doing something, there's really nothing to kind of stop these guys for right now. And the thing I'll say about the government, and they're going to have to watch themselves, is if we do see unemployment start to rise at all, it's going to get political. And the reason it's going to get political is these are two big employers, and not only are they two big employers, but these two companies then have a lot of jobs produced outside of them, right? They directly employ a ton of people, but it's really about the indirect jobs, like the amount of businesses that need Facebook, Instagram to serve ads to people and things like that. It's a lot of businesses. And when it comes to Amazon, the amount of sellers that make money from that, I mean, we're talking about this is something that affects millions of small businesses and millions of folks around just the United States of America, never mind around the world, right? And so if we see unemployment going up, I think the B-man who's in office right now and his administration there is going to come down on the FTC and those guys and say, chill. Because you want to hurt these guys, they're going to hurt jobs, which is going to hurt us getting back reelected. So, don't expect things to move too fast there, in my personal opinion, because it will get political. it will get political. And so, they need the economy to be as strong. They need the jobs market to be as strong as possible right now for the next bit of time here, for at least the next year. And so, anyways, that's kind of my 2 cents on that. So the next recession will hurt both Amazon and Meta, but we just, that could be years away. We don't know when that is. It's going to happen someday, but we don't know when it is. So until then, these stocks will drift higher and higher and higher and higher. Amazon's racing to $300. Meta's racing to $1,000. I think both are coming from the multi-trillion-dollar club, which is obviously Microsoft's a part of that, Apple's a part of that, but both of them are coming for that. And they're not getting there tomorrow. Meta's not getting to 1,000 tomorrow. Amazon's not getting to 300 tomorrow. But my opinion, they will get there. It's just going to take some time here. But based upon kind of the projections and the numbers I see from both of these companies, I think they will get to both those price targets over the next few years. Now, if we go ahead and take a peek here, I think these stocks are actually too cheap right now. Both of them. Meta was trading going into today at about 22 times analyst projections here, okay? But here's the deal. Analysts are at about 1751. I think on the low end, Meta is going to do $18 in 2024 and probably all the way up to maybe $20 of EPS on the upside. So the stock's actually still trading way too cheap. If you look at the fact that it's a double digit, it's growing revenue now 25% year over year. You can't value a stock growing revenue 25%. That's one of the safest business models in the world. You can't value that with a forward P in the 20s. You got to put it into the 30s. And so that's why Meta could run to 600 to 700 quickly here. I mean, like, quickly. So that's kind of like it just doesn't make financial sense. Anybody that should understand valuing companies, like, if you've got a company growing revenues like that and it's one of the safest business models in the world, it does not deserve to be trading at a forward P in the low 20s. No, okay? Then revenue estimates. I was looking at revenue estimates that analysts have out here. They have about 13% revenue, being up in 2024, and I'm like, that number's too low. In my opinion, lowest possibility is 15% revenues up year over year in 2024, but the potential of like a 20% upside there for revenue. And so I'm like, analysts are just wrong here. They're going to have to go through a big cycle now in regards to Meta of what is this cycle called? This is called the chase cycle. So what's going to happen now is analysts are going to start chasing each other around, upping price targets. You're going to start seeing a lot of $500 plus price targets on Meta. You're going to start seeing $600 plus price targets on Meta. They're all going to chase each other around as the stock goes up and more. They're going to have to just one after another bring up their price targets. Even the bearish analysts around Meta are going to have to start bringing up their price targets in regards to Meta. So it's just going to be this kind of like boom, huge cycle we have going around that, right? On top of that, analysts are going to have to start bringing up their numbers also simultaneously. So we have that to play out. So we're going to have a price target game. We're going to have an analyst bringing up their numbers game. And also, you're going to see a lot of positive commentary from the analyst community coming out here over the next bit of time in regards to, wow, Meta is just a lot stronger than we thought. You got to eat crow here. If you're an analyst, you've been wrong. You're just wrong. These guys are wrong in regards to their numbers, and they've been proven out for quarter after quarter after quarter in regards to Meta. Like, Meta's killed it now, quarter after quarter after quarter for several quarters in a row. At some point as an analyst, you got to say, I'm way too bearish on the stock. I need to bring up all my numbers substantially. I need to bring up my price targets because they've been massively wrong in regards to Meta. And so I think it's about time they throw in the towel there and say, okay, I need to get a lot more bullish. So we're going to have that cycle play out in regards to Meta. Then if we go ahead and talk about Amazon, they're also too low in regards to Amazon, okay? So Amazon looked like it was expensive coming into today, right? 43 forward P. Analysts had the company doing about $3.59. I don't see how they don't do $5 in 2024. When I look at what AWS growth should get back to and the sort of profitability AWS has, right? And then when I think about, obviously, the e-commerce business and how much they've, made things much more efficient there, plus you have things like, obviously, Amazon Prime and price increases and different things and ad products and so many growth levers all over the place, I think $5 isn't coming here. So the stock's trading way cheaper than where analysts have it. And obviously, Amazon's such a big growth company for the next 10, 20 years that you're always going to pay up a big premium. That's the way Amazon's always been. That's the way it will be. And in regards to revenue, they're also too low there. Analysts are at about 11.5%. I think the lowest possibility for Amazon in 2024 is about 13% revenue growth. I think on the upside, we're probably looking at about 17%. So my midpoint's 15% revenue growth for Amazon. And I'm clearly much more right than analysts are right in regards to these stocks. It's just factual. Like, there's just facts. And so, you tell me, are these stocks expensive? Or Wall Street going to realize, crap, we got to keep buying up these stocks. I'm going to go out there on a limb and I'm going to say Wall Street's going to have to come out and keep buying up these stocks. And there's going to be short-term dips when the market dips and things like that. But at the end of the day, they'll be there to buy up all the dips and take the stock from there. Okay. Now, in regards to me buying or selling the stocks from here. Okay. Here's my deal. All right. These stocks are already too heavy for me. Meta is likely going to be an $800,000 plus position as of tomorrow. Right. I think there's a question of, is it Meta an $800,000 position tomorrow? Is it a $900,000 position? Right. That's super heavy. It's already an insanely heavy position for me in the public count. And then Amazon should probably be up to $180,000 of maybe $200,000 position tomorrow, depending upon how fast that stock rolls tomorrow. So 180 maybe low end, maybe 200 on the high end. So I'm already too big. So these two stocks are just a hold for me. Just because they're going up doesn't mean I have to sell them. I think they're just a hold for me. Okay. And I also do view there being better buying opportunities after tomorrow than those stocks. That doesn't mean I think they're going to start going down. I think Amazon and Meta have a long way to run, as I spoke about, right? But I think there's better risk-reward profiles out there, right? PayPal, SoFi, Cheesecake, Baba, Nike. I think there's some better risk-reward profiles and some stocks that have been beaten down dogs that Meta and Amazon were at one point in time. They're no longer those beaten down dogs anymore, right? Meta is going to hit a new all-time high tomorrow, and Amazon, we'll see if it hits a new all-time high, but I wouldn't be surprised if it does. It hit a new all-time high. And so they're just in a very different place with those stocks than, obviously the PayPals and the SoFis and the Cheesecakes and the Babas and the Nikes are. So I just see other opportunities out there, and I'm also already way too top-heavy in regards to the portfolio. So that's kind of my views. Now, could I understand if somebody's out there buying Meta stock tomorrow? Sure. I don't think it's a bad buy. I think it's actually a moneymaker. I think if somebody buys Meta tomorrow at $455, they're gonna make. I think if somebody buys Meta tomorrow for $555, they're still looking good. The stock's not trading at $555 tomorrow, but if they did pay $555, they're still looking good. Look at where the forward P is going to be at tomorrow, and tell me that's not a deal based upon the growth rates. You can't argue that. Even at $555 tomorrow, Meta would still be a deal. It would still be stealing money. That's crazy. That's wild to think. So that's kind of my perspective on that, okay? Alrighty, folks. Appreciate y'all joining me. Thank you. Congrats to all Meta and Amazon shareholders out there. Hope you made some dang money, and hope you continue to make a lot of money. If you want to support my content, do so on Patreon. If you enjoy these videos, pin comment down there to join in there, and then you also get to see the stocks I'm buying and selling each week, including on making moves in the morning. Much love, and have a great day.